Okay, so we took a look, we did our daily review of our trades, and we found that uh, two out of three of our positions were doing really well. The one position that is not doing very well is this IWM position because we set this on a few days ago. If we take a look at our charts here, we'll take a look and see what IWM did. Oops, take the symbol out. IWM, we put our positions in down here around the 69 level, and look, it has just shot up like crazy. It's gone up to 71, and today it gapped up another point here. So, but we're coming right into resistance here, and there might be some resistance. It might blast through there, who knows? But because we don't like to predict price. But all we can tell is that it's starting to go up a little bit. It may take a rest here eventually, but it might get up to the 74, 75, 76 level, around 75. So what we want to do is we want to take a look at our position on and look at some potential adjustments here. I've gotten a couple ready. It looks like you could. Let's say we put on a call uh, calendar. What does that do to our position? Well, it does kind of spread it out, that's for sure, and it does extend our break even all the way to the upside to 70, a little bit, about 75, 70, almost 76. But it certainly does lower our tent down on this side, doesn't it? I mean, this doesn't look too good. If we do have a pullback here, then we're going to be in a bad position on the other side of this trade. If we do go up to around 74, 75, we're going to be looking stinking good. But the problem is, of course, is that we do not. We're really bad at trying to determine the future. So I've got a 70 put calendar on the other side. So basically what we're going to be doing is creating we're going to put a double calendar on top of the double calendar that we already have. And what does this do for us? Well, actually, it gives us a little bit more profit potential because we are adding a few more contracts. If we look in the center of our tent here, our maximum profit at expiration is $347 on the number of contracts we currently have. If we take those off, our maximum profit, well, not our maximum profit, but the profit in the center of our tent here is only $252, so it does add a little bit of additional profit potential to our position. But what it also does is it extends our break evens now out to about 75.5, and on the downside we're right around 68.5. So remember we took a look at this position here. If we run up into the 75, 76 level, I mean, considering if we do get through this resistance level, we may run into this 200-day moving average right around 75, so that's not too bad. I mean, we could handle that if we're getting close to expiration. If we're up around that 74, 75 level, that'll give us about $500 in profit on expiration. We'll probably take our position off at 30 to 40% of profit there. So that'll be about $250 to $300. If for whatever reason we decide, the market decides to go down, our break even on this adjusted new double calendar that we're laying on top of our other position, our break even to the downside is around 68.5. If we take a look at our graph here, we're right down at the bottom here of this little consolidation period here, and it's also below this blue line. See, this blue line is our new channel line that I started drawing, way back here. It looked like, because these points were kind of like support points on the way down, and then they became, some of these became support down at the bottom here, and I've got a couple of data points here where I can actually couple of price points where I can actually draw a line on them. So if we do follow this blue line, we're going to be, if we fall back down into the 68.5 level, that is potentially there, but it's also a support area, so we could bounce back up again. So that's what we're going to do. That's how we look at this. We kind of look at this as a, we want to look at the resistance points on the upside. We want to look at the support points on the downside, and if those line up pretty well, and we can adjust so that we're back in the center of our center of a profitable position here with our double calendars. Even though we're laying over, we've got a double calendar on already, and we're not going to touch that. We're just laying over another double calendar because of this huge price move that we've just had here. It went from 69 all the way up to 71. And for the IWM, that's a pretty big one. So that's how we're going to adjust this position today. Remember, this is what it looks like without the adjustment. We're way down here in negative territory, getting very close to our break even. We don't want to wait until after it's gone through our break even to make any adjustments. We want to start taking, we want to start looking at adjustments right around this break even on either side of it. You can go, maybe a point beyond it, but you don't want to be way down here before you start making adjustments, because it's too late then. So that's how we're going to make our adjustments today. We put on another double calendar, laying on top of the double calendar that we already have because of this huge price move, and we're looking good. So that's it for today, guys. This is how we're adjusting a double calendar by laying another double calendar on top of the one that we already have. That is one adjustment that you can do with a double calendar. There are other adjustments that you can do. So take a look at the adjustment CD for other adjustments, but this is the one that we're going to be doing today because it looks like it really makes the most sense for this position. It extends our break evens on either side, puts us back into the center of our tent, and that's what we're going to do. All right. So stay confident, guys. Trade with confidence, and I'll talk to you in the next video.